Hi guys, back again with another video. My name is Lindokuhle Bambelo. So on today's video, I'll be showing you guys how to find better entries or how to time your entries. Well, a lot of people do know how to analyze. They know their technical analysis, fundamental analysis, and whatnot. But what I found common among people who are really struggling in terms of trading, or one of the elements where most people struggle with, is finding entries. I mean, they can analyze, they know their patterns and everything, but when it comes to actually placing that trade, that is where they really struggle at. So I don't know, guys, I've been there as well. Like, I knew how to analyze, I did my homework and everything. However, the most difficult part was when I had to put in a trade. That is where now the emotions comes in. The fear of losing money, not trusting in your own analysis and everything like that. So this video was basically inspired by that. So on today's video, I'll be showing you how to find entries using like candlesticks, support and resistance, the breakout strategy or way of entering, and also a little bit of trends, because they usually say your trend is your friend, and that statement is true. It can never be far away from truth. So yeah, that is also one last thing. I'll be showing you how to find trades using Confluence. So what is Confluence? Confluence is when you have more reasons to enter a trade. You have more confirmations as to why a trade will be a buy or a sell. So without any further waste of time, let me get straight right to the point. So if you're wondering why I have on my right the red list, so what I normally do is I do have, like everybody else, a watch list. However, if there are pairs or indices that I'll be looking at during the week, then I prefer to filter that out from the rest so that I can focus on those that caught my attention based on strategy and how they've been moving. So yeah, guys, without any further waste of time, let me get straight to the point. So in front of me, I have EURUSD, and fortunately, I was enough to capitalize on this trade. As you can see on the screenshot on the top right, yeah. So, you know the vibes. I can clear the analysis and start from scratch. So you can actually see how it all went down. So as usual, guys, as usual, I do what is called a top-down analysis, which is starting from a higher time frame and going below to the lower time frames to find entries. So the whole point of that is to go to the higher time frame to identify my playground or trend or whatever, whether we're trending to the upside, consolidation, or downside. So that is mainly the point of doing all of that. So you would remember from the previous videos that on EURUSD, we had this nice bearish trend over here. Nice bearish trend over here. It's pure, it's clean, guys. Nothing complicated. First touch, second touch, third touch, first touch, second, third, fourth touch. And then you would see at the current moment that we have a support level. So support and resistance, like I explained in the previous video, it's those levels or price levels that when the market reaches, it usually changes direction. And then we buy on support, we sell on resistance, because the resistance means failure to break above, while support means failure to break below. Right. So in EURUSD, I had so EURUSD will be a combination of how to find entries using support and resistance, candlesticks, and patterns, because I'm more like a pattern trader. I look at patterns, the structure, and everything. So because now I have my trend, I'll quickly go down to the 4-hour time frame to actually understand what is going on in the 4-hour time frame. And I will also take you through as to how was I able to actually catch those buying opportunities on EURUSD prior to the support level that I'm seeing over here, right? So you would remember in the past another videos that I had some sort of a trend that looks like this, a pattern actually, based off the fact that it was impulse move, then this was a correction. So this was our next impulse, completing that 90% rule that I talked about on the last video, right? So seeing from the 4-hour time frame, there is nothing really clear at the time or sometime during the week as to why did I take those buys, but it will be much more clear on the 4-hour time frame. So because guys, I personally do have the experience, so I can be able to spot patterns in places where somebody else who is still a beginner trader cannot. So I spotted this sort of a pattern. So spotting these patterns and everything like that is more like a starting block into finding your entries. That is just the understanding of the market nature. So you would see that, okay, the market gave us this impulse move, then corrected, gave us this impulse move. So the next thing that we would normally anticipate after every impulse move, we get a correction, right? So logically, we can know that after this impulse, then we most likely be expecting that impulsive and that corrective move to the upside, because after every impulse move, we get a correction. But that does not mean that the market did not stand better chances of breaking below this gray support level below in order to continue going to the downside and possibly giving us another touch here before actually correcting to the upside, right? So I had this pattern. So this is more like a reversal pattern. So here's another trick or thing that I want you to take away from this video. If you have a level of resistance or support, what is important sometimes is what is the market approach towards that level? Because that will give you an indication of what could possibly happen next, right? So for instance, if you have a support level and then the market approaches that level in a corrective manner, so that is usually how patterns are formed, because that corrective move or sort of pattern that we can find serves or give us an indication that the market may probably retest, actually no, it may reverse and change the direction, which is it loses steam and fails to actually break below. So that is why we end up having patterns like double bottom, double top, and everything like that, because that means the market, if it was trending to the downside, then say maybe approach that level in a corrective manner, then we would most likely be looking for something like an inverse head and shoulder, a double bottom, then at resistance, we'll be looking for a normal head and shoulder, which I shown you on the previous video, or we can look for a double top, something like that. So for instance, if we can look at what's happening here on a bigger picture, you would see that there is some sort of a possible inverse head and shoulders over here. That is number one reason we would have entered buying opportunities on this market. Secondly, seeing the market approach to this level in a corrective manner, because we understand that after every impulse move, we get a correction. So it would make more sense to say, because this is a support level, the market is approaching that support level in a corrective manner. So that is most likely where we're going to have our next impulse to the upside, of which that actually happened. However, if the market approaches a level in an impulsive manner, then more chances that the market can break that level, whether it's support or it's resistance, and actually continue with the direction that it actually came from, right? So this is number two. So we have a support level. The market approached this support level in a corrective manner. So that is where we would most likely find our next impulsive move. Then we also have a pattern, which is a reversal pattern, more like it's a falling wedge, if I can put it that way, or channel fall. No, it's actually a falling channel, which is usually serves as a bullish continuation flag. No. It's not a continuation channel or flag. It's a reversal, because this market came from the upside, which is what it was trending to the downside, and then when it got there, it changed direction and moved to the upside, right? So we'll dig deeper now into the 1 hour time frame to actually show you how I was able to catch those buying opportunities in terms of support and resistance, the reversal pattern that I'm seeing here, and the inverse head and shoulder that I was seeing at a bigger picture. So going to the 1 hour time frame. Right. So this is what happened, guys. This is how, so now I'll be showing you how I was able to catch those buying opportunities on EURUSD using the candlestick, the support, the pattern. Yeah, those three things. So that is an example of what Confluence is. When you have more confirmations and reasons backed with facts and your own understanding of how the market moves. So for me, I saw that, okay, the market from the previous week, it consolidated for quite a long time. It finally gave us those selling opportunities, something like that. So that is when the market has been oversold. When the market was selling for the longest possible time, that to say that in Forex term, we say that the market was oversold. So if you're looking at this, how strong this support level was, you would see that the market rejected its first time, rejected second time, rejected third time, and it rejected for the fourth time now, which was more like a confirmation that indeed the market was ready to actually go to the upside. So what is it that I normally look for in terms of candlesticks? So in terms of candlesticks, I did not really learn about a lot of candlesticks, but when I got more better and better, I felt that the most reliable candlesticks for me was a pin bar, which is also known as a hammer, and a bullish engulfing candle. So the reason why I was confident on executing this buy was based off the fact that the market rejected 4 times. We had a strong support level and we have our reversal pattern. So that is where I was looking for my next impulse, because after every impulse move, we get a correction. So what was my anticipation? My anticipation was the next impulsive move to the upside, which we finally did get. And then without hesitation. So if you would remember, I said that a bullish engulfing candle is a candle that its body, like the body of that particular candle, is bigger than the previous candlestick. So that is what it means to engulf. It actually means that that next candle covers the full body of the previous candle. So I'll zoom in here and actually show you how did that actually happen. So in this case, for example, these 2 candles here, the blue and the red one, this was an inverse pin bar, and then this was a bullish engulfing candle. So for me, it was enough to actually enter, and I wouldn't say I was lucky enough, but my timing was good in such a way that I did not hesitate to execute on that buying opportunity when I saw that bullish engulfing candle. So this is what is called confluence, when you have more than 2 or 1 reason to enter a trade. So just a quick recap, I said that I entered this trade based on the fact that we were at a strong support level, the bullish engulfing candle, the pattern, which is a reversal pattern, and then also the bullish engulfing candle. And then I took my buying opportunities to the upside. And then the market actually did cover the 90% rule in there, and then it started changing direction. So guys, this is what it means to actually have what is called confluence. These are some of the things that I pay attention to in order to find entries. They don't have to be 5. It actually depends on traders' knowledge, needs, and everything like that. Because some people use order blocks, which I slightly know anything about. Some people use indicators and everything. So the market, guys, fortunately, it caters for everybody else's needs. So this is just the beginning. So moving on now to the next pair, I would say USD Swiss francs. So on USD Swiss francs, I will also show you how, but at the time the price was somewhere around about here. So with me understanding that I was still in a bullish trend, I was looking for buying opportunities. So how will I find those buying opportunities? By going to the lower time frames so that I can find entries. So going into the 4-hour time frame, I saw that, okay, the market had this level, price level, that was being respected for a long time, because you would see the market rejected, which is what is a resistance, then it broke it now, then it turned into support, then the market failed to break above for like 1, 2, then until, so it was something like that. Resistance was being turned into support, support was turned into resistance, and everything like that. So what I saw here on Euro AUD was, okay, so remember guys, I said the current price is what is important. So I came to the 4-hour time frame and saw that, okay, I have my uptrend, number 1. I had my support level because it was still at the support at the time. Unless, of course, if it broke below, gave me the retest, then that is when I was going to start looking for selling opportunities. However, I was looking for buying opportunities simply because I saw that the market was still inside this uptrend. We had a support level. So mine was just to look for a pattern on the 4-hour time frame and a candlestick to actually confirm or use as confirmations that indeed the market was ready to go to the upside. So how did I go on about doing that? So this, I spotted this pattern here, but it will be much more clear on the 4-hour time frame. So remember guys, if you are looking at these time frames, if something is not clear on the daily, on the 4-hour time frame, it's simple, move into the 1-hour time frame, because things will become much more clear and clearer as you go lower. For instance, if on the 4-hour time frame, this is an impulsive move, believe me you that if you go to the 2-hour, 1 hour and everything like that, it will be looking something like a correction. Yeah, a correction. So which you're about to see in this case. So going into the 1-hour time frame, right? The reason why I said, okay, I will look for buying opportunities on this market was simply because of the fact that we were in an uptrend. In an uptrend, we're still looking for buying opportunities for as long as the market is still inside that bullish trend. Then the second thing that I spotted was this support level, which the market was respecting for a very long time. And then I noticed how the market was approaching this support level. It was approaching it in a corrective manner. So I said to myself, okay, after every impulse move, we get a correction. So maybe this is where we were going to get our next impulsive move to the upside, right? And then I said to myself, okay, the market failed to break below. And then this is when I came here, when I started seeing these bullish candles and everything like that, then that is when I knew that indeed we're going to go to the upside. So so what is it that I was doing here? I was just using my knowledge of understanding how the trends work, making the trend my friend. Because if I was looking for selling opportunities here, that would have meant I was trading against the trend, right? So I traded with the trend, which is going to the upside, because we were in a bullish trend, we were at a support, we had the pattern, then that is most likely where we are going to get our next impulsive move to the upside. And then simple, I put in my buys here, and then indeed the market went to the upside. Then another way in which you would have entered this market, you would have said, okay, I missed out on this initial entry. Then what is it that I'm going to do? I'm going to wait for that retest and go for continuation to the upside. But when I was trading this, I think I closed those trades when the market reached these levels, because I was not sure for how long it was going to go to the upside. So I said to myself, instead of losing the profits or allowing the trade to go back to my entry point, let me rather close how much I've secured already. Then maybe if the market comes back here and present me with another opportunity, then that is when I will start looking for buying opportunities again. But to be honest, I felt like the market was not really going to come back for a retest. I felt like it maybe has reached its course. Then I closed my trades and then I was done. But on Friday, I caught this actually on Thursday. Then this was on a Friday, the market came back and then, so all the other pairs that I analyzed, which is EURUSD, USD Swiss, and this one, I actually caught them on Thursday. And then this retest and then continuation was actually happened on Friday. Yeah. So yeah, guys, that is all I have for you today. I just wanted to show you different ways in which you can find entries. It does not have to be complicated, guys. You just need your own basic knowledge of how the market works, your basic understanding of the patterns, support, resistance, continuation and reversal patterns, candlesticks. You don't have to learn all of them, but as a beginner, you can learn what you can and find out what works best for you. And yeah, guys, that is all I have for you today. I will most probably do a part 2 of this video on how to find entries, maybe another pair, but most importantly on the indices, which is the zone to zone type of way to find entries. So if you enjoyed this video, please hit the notification bell, hit the subscription button, so that when I drop again, you can actually be notified. And also, if you liked this video, please comment down below that I liked this video. Then that is how I will know that you actually did watch until the very end. See you on the next one. Peace.